we have discussed this is simply a financial system where the exchange of funds will be done among the persons who have deficit of money and the persons who have surplus of money, that we have discussed yesterday. And the last topic that we have discussed yesterday was the types of financial system, that is formal and informal. So formal financial system is simply a system in which what we are seeing here, a system in particular way that is regulated or that has a certain rules and regulation. An informal financial system is the system which do not have any kind of regulations or something is going on. Hana, it depends on the individual financiers, whatever they want to charge on the particular money, that will be decided by themselves only. So let's start. This is the Indian financial system and this is the regulatory bodies we have discussed, the RBI, SEBI, PFRDA, ADA. These are the regulatory bodies of the financial system. Now next. If I talk about the informal financial system, you can see informal financial system is simply a financial system that has evolved as an extension of a social structure. Like in the last class, we have discussed, like if I need a money, I have two options. I can go to the bank and take a loan from there, or I can go to my relatives or my friends or my parents and take funds from them. So if I'm taking funds from my relatives or friends or parents, that is an informal system that has been extension of the social structure, right? But if I'm going to take a loan from the bank, that will be known as your formal system. So you can see here, the statement is saying that informal financial system has evolved as an extension of the social structure, like with each other. After discussion with each other, we are asking for the funds. Now, and it's categorized by lack of regulations. So no regulations are there. If the relatives wants to charge a certain rate of interest, they will charge according to their will. And if they don't want to, they will do not charge it. And there is no requirement such as about the collateral and all. So this is all depends on the individual person. Hana, so there is no regulation, lack of regulations will be seen there. Now, low transaction cost is there because the rate of interest depends on your mutual understanding. Then unstructured procedures are there. Like in the bank's loan or in the banking system, we have a structured procedure that covers like, what can I say? Before providing loan to the customer, you have to check their credit history. After that, you have to check the purpose of a loan. You have to check the income background. You have to check the collateral size and amount. You have to check that the third party guarantee is there or not, etc. But here there is an unstructured procedure. Transparency and low default rates will be there, right, in case of your informal system. Now next, typically the examples of informal financial system is who could be operating as association and funds. Okay. Now, apart from that, you will have partnership firms that consist the local borrowers, the pawn brokers, then non-banking financial intermediaries such as finance, investment, and chit fund companies, etc. So these are also informal financial systems. Acha, what is chit fund? Let me know. What is chit fund? If you do not understand any particular word here, do ask the meaning of that. Now, let me know what is chit fund. What is chit fund? What is chit fund? Let me know. So if we talk about chit fund, it is not like it is a part of your state regulations. The state governments took part in it. Let me know what is chit fund. If you do not know the answer, just write don't know. Okay, Dhiren sir has given a very funny definition of chit fund, that is 21 दिन में पैसा double. That's true. So kind of a schemes that tells you a very attractive investment schemes, like now whatever money you have, it will be double in 15 days, it will be double in 20 days or whatever. If you have seen the movie for Hera Fairy that has been shown in that particular movie, like your money will be double within 20 days, within 15 days, within 1 month, whatever. So these are the chit funds, है ना, like attractive investment options they have given us, they are going to give us. And they are actually doing what? They are just a kind of a lottery business, है ना. They will give you a chit will be prepared with the name of the investor, and one of the chit will be taken from out of that, and the money will be given to that particular person. But they are very risky, है ना. They are what? They are very risky, because no such regulator is there who is regulating this particular business. So that's what we're talking about. Chit fund is also a part of informal financial system. Right. So although informal and unregulated, this section of financial system has its own importance, especially in early days and in rural and lesser developed geographies. Now, why they have a very importance there? The reason behind it, banks do not want to or not wanted to give loan to the agriculturalist, or let's say, for example, the persons who belongs to the weaker section, the disadvantaged society, the vulnerable society of a country, because bank has a certain procedure. Banks are not allowed to give loan to anybody. Now they are giving loan to every person because the government is involved there. Government is going to take, or government already taken a certain kind of guarantee on behalf of the weaker section, like under the PSL, like under the Mudra Yojana, है ना, under the KCC, under your other different social welfare schemes that's helping the people to grow. So that's what we're talking about here. Like now the government has the involvement to make sure that each and every sector of the society, each and every section of the society are growing. And for that, government has introduced social welfare scheme. All the schemes will go through the bank. But now earlier that not used to be there. People were not aware about the services, schemes, banks and all. So there was a very less financial awareness. But now the people are aware, so these schemes are working right now. But they were not available at the earlies of our economy. That's why these money lenders, these individual relatives, the traders, the partnership firm that covers the local broker and all, these used to be very important for them, because everybody need a capital and they were not able to trust on the banks. They were not able to participate in any kind of financial system because they were not aware about it. So that's why we are saying that these particular system used to have a very important or very much importance in the Indian economy. Now, the second one, we have a formal financial system. Achha, if I talk about formal financial system, who regulates the formal financial system? Let me know the name of the regulators. Those who are watching us on YouTube, also let me know. And also you can ask your questions, because I'm also checking the comments of YouTube. Okay, so first let me know the regulators of formal financial system. Who can be the regulator? So first of all, the formal financial sector or the system is the same as a formal form of any organization that covers the rule book, that covers the terms and conditions, that covers the guidelines and etc. That will be seen here. So you can see if we talk about the formal financial sector, on the other hand, it categorized by presence of an organized, institutional, regulated system. What will be present there? A certain organized way will be there in the organization. Like every organization that have a hierarchy there, and you have to go through the hierarchy. Second, institution, it will be institution. It will be regulated by the regulators, like you guys are saying, RBI, SEBI, apart from that, Adda, PFRDA, these are the regulators of our country. Now, which caters to the financial needs of the modern sphere of economy. It forms the backbone of any economy and one of the most important system in the growth of the nation. And why it is one of the most important? Because it has a terms and conditions, because it has a guidelines. Without that, it is very obvious, and you also know that after having so many guidelines, banks are facing the rise in the NPAs. Banks are facing rise in NPAs. After having so much guidelines and rules and regulations, still this is the situation we are facing. So what if there is no regulation? It is very obvious that if there is no regulation, there is no growth of the economy, because people will start doing fraud and all. The credit risk will increase, the financial risk will increase, the liquidity risk will increase. So these kind of situation can be seen. That's why we are saying this formal financial system is the backbone of any economy, because it helps economy to grow. Clear? Now, next. Acha, what is NPA? Let me know what is NPA. NPA we are going to discuss in the subject of your principles and practices of banking, but also in this particular subject, the certain understanding of NPA is required. So first of all, let me know what is NPA. Apart from that, also let me know what are the ways to overcome the NPA or to recover the NPA. Now, you can see the components of the formal financial system are the financial institutions. Like what? Like your banks, like your commercial banks, RRBs, payment banks, small finance banks, etc. Apart from that, NBFCs are there, mutual funds are there, insurance companies, pension funds are there. Then we have financial instrument. Financial instrument means any instrument that we are using in the financial market, like the shares, bond, debenture, deposit accounts, loan types of loans, your insurance schemes, your mutual fund schemes, the different types of schemes of mutual fund, everything will be covered here. Now, the financial market, simply the money market, the capital market. Hai. Apart from that, your forex market will be the part of this formal financial system. Okay. So everyone is saying it is NPA. That is non-performing asset. I'm not asking about the full form. I'm asking what is NPA. NPA is non-performing assets, but what is NPA? It's a type of, or it's a part of the asset of a bank which has not been performing in a market from a certain period of time. Like bank, we know banks provide loan to the customers, and when those customers stop paying or repaying the installments, that amount will be known as non-performing asset. So what is NPA? NPA is a non-performing asset that is simply a type of credit provided by banks to the consumers. On that, the consumers stop paying the principal and interest for a certain period of time, and that period of time will be 90 days for all the other accounts, but two harvest system, or we can say two harvesting crop season or harvest season, you can say, for the agriculture sector. Apart from that, 90 days. But yes, this 90 days can be changed by RBI whenever it is required, right? So if I talk about the formal system, the formal system is simply your organized system, because you know what should be there and what is required to maintain the hierarchy or to maintain the, what can I say, transparency and everything. So regulators, financial institution, financial market services, these are the organized part. These are the formal system. And you can call the informal system the non-organized sectors, right? Like the money lenders, the local bankers or brokers, you can call them, traders, landlords, chit funds, etc. These are the informal. So you can call them organized and unorganized also, obviously. Right? Now, next, the financial institutions are divided into two categories. Right? The financial institutions are divided into two categories. That one, we have banking institution, and the second one, we have non-banking financial institution. So if I talk about banking institution, that's very obvious that RBI is going to regulate them. Who is going to regulate them? RBI. But if I talk about non-banking financial institution, who are going to regulate them? Let me know. Banking institution, you all know banking institution will be regulated by RBI. But what about NBFI? Let me know who regulates the NBFI, non-banking financial institution. Now, what banking institutions are covering? Let me tell you. Okay. If I talk about banking institution, it will be covering, first of all, the central bank, that will be RBI. And RBI will divide the banks into two categories. That is your scheduled bank. And the second one will be your non-scheduled bank, that we have discussed yesterday also, scheduled and non-scheduled bank. Clear? Then if we talk about the scheduled bank are further divided into three categories. That is commercial banks, non-commercial banks, commercial, non-commercial, and cooperative banks. commercial, non-commercial, and cooperative banks are there, right? In case of commercial banks, there are three types of commercial bank. That is public sector bank, then we have private sector bank, and then we have foreign bank. These are the three types of commercial banks. The public sector banks include your SBI, State Bank of India, and also your nationalized bank. Nationalized banks. Acha, how many nationalized banks are there? Let me know. Right now, how many nationalized banks are there? NBFC also regulated by RBI. Okay. Dhiren sir is saying RBI. Naresh sir is saying RBI. Michael sir is saying Company Act. Okay. No, actually, the regulation will be done by RBI only. Okay, why? I will let you know who comes under the non-banking financial institution. Then you will understand by yourself that the regulation will be done by RBI. Now, so these are the commercial banks. Now, the cooperative banks include three banks. That is primary credit societies, your urban cooperative banks, or we can say, first of all, district central cooperative banks are there. And then we have a state cooperative banks. Then under the non-scheduled bank, we have local area banks. What we have local area banks. Apart from these, there are different commercial banks also there that have a certain purpose, like the RRBs, payment bank, or small finance bank. This is the banking institution, right? Now, if I talk about the non-banking financial institution, that is also regulated by RBI because it covers what? It covers these. So first of all, we have all India financial institutions. That will be your SIDBI, NABARD, EXIM, NHB, IFCI. So that is obviously regulated by RBI. Second, we have non-banking financial companies. They are registered under the Companies Act, but they will be regulated under the RBI Act. Now, if I talk about PD, you know that is a primary dealers. We have discussed yesterday also. So primary dealers are whom? They are the mediators that helps RBI for the selling and purchasing of government securities. So these are the non-banking financial institutions. Okay, these are non-banking financial institutions. And if I talk about nationalized bank right now, we have 11 nationalized bank only. Some are writing 12 here, Hana, but that's not true. We have 11 nationalized bank plus one we have SBI. Okay, so now the public sector banks are 12. The public sector banks are 12. Those who are confused, I will let you know. The public sector banks are 12 now, but the nationalized bank, we only have 11. SBI will not be counted in the public nationalized bank. Very good. In 1969, 14 banks were nationalized, and in 1986, banks were nationalized. Very good. Now, next. If we talk about financial institutions, so you can see what is financial institution is. While on one hand cater to entities who possesses wealth, on the other hand they cater to those entrepreneurs and businesses who require the wealth in the form of capital for their investment. Okay, so financial institutions are what? They are the certain entities who have wealth. On the other hand, they cater those entrepreneurs, those form of capital for their investment. So they do both activities. They have assets and liabilities also. So assets are simply the loans that banks are providing to the public. Like if I talk about the bank, every business have certain assets, okay, and certain liabilities. Achha, what is the liability of a bank? Let me know. What is the liability of a bank? What is the liability of a bank? Okay. Yes, that is liability which they have to pay back. And these liabilities are deposits. And deposits are of two types. That is demand deposit. And second, we have term or time deposit. Second, we have term, or you can call it a time deposit also. So deposits, liability means the thing that they have to pay back. And that's the public's deposits. And deposit is divided into two categories, demand and term on time. So demand liability covers what? Current account, savings account. And time covers your recurring account and fixed account, right? That is CASA and RAFA. Now, what about assets? What are the assets of a bank? What are the assets of a bank? See, demand deposit covers your CASA. that is current account, savings account. And term or time deposit covers your RAFA, that is recurring account and fixed account. And loan is asset, yes. Loan and advances. That is your asset of a bank. And they are also divided into two categories. That is a standard asset. On the other hand, it also caters to those entrepreneurs or businessmen who required fund to whom bank is providing loan or advances. That is the asset of a bank. This is financial institution. Okay. Now, next. What are the examples of financial institution? Now, you guys let me know what are the examples of financial institution. We have discussed so many times. Let me know what are the examples of financial institutions. Very good. Banks, NBFCs, yes, and you can say mutual funds, insurance companies, insurance brokers. All these are the financial institutions. Na? See, the first we have financial regulators like RBI, SIDB, SEBI, IRDA, PFRD, etc. Second, we have commercial banks and cooperative banks, right? Or different types of bank. All the types of banks will be covered. Then we have NBFCs, non-banking financial companies. All types of NBFCs will be covered here. Acha, can NBFCs take deposit from public? Let me know. Yes or no. Answer in yes or no. Can NBFCs accept deposit from public? Now, next. Development financial institution, that is your SIDB, NABARD, Exim Bank, NHB, National Housing Bank, IFC, etc. These are development financial institution. Now, next we have insurance companies and brokers, that is regulated by IRDA. Then we have mutual funds also. Then we have pension funds. Okay. So these are what? These are the examples of financial institution. Some are saying yes, some are saying no. Okay. So the question is, can NBFC accept the deposits? So the answer is yes. Answer is what? Yes. NBFCs can accept the deposit from public, that is known as R. Residuary NBFCs are there, but they can accept deposit only in case of what we can call it, only in case of your first, we can call it like a certain arrangement or certain scheme that will be given by RBI. So under a certain scheme or arrangement, they can accept deposit, but they cannot accept demand deposit. They can only accept the term deposit. And the minimum duration will be your 1 year and maximum duration will be your 5 years. Okay, maximum duration will be 5 years. Sometimes it will be given, options will be given in the months, so 12 months and 60 months. So this is what the NBFCs can accept. They can accept deposit, but not the demand one. Term one can be accepted. Now next. Banking institution or depository institution. Now, what is banking institution, depository institution? Because we are saying the financial institution now, they can also be divided into two types. Now we are dividing the financial institutions in two types. Okay, so first is saying banking institution or depository institution. This includes banks and other credit unions which collects money from the public against interest provided on the deposit made and lend that money to the ones in need. So what are these? The banking institution or the depository institutions, they include the banks and credit unions that collect money from public against what? Against the interest. Like obviously you are taking liability from the public, so you have to pay interest. That's what we're talking about. They accept deposit from the public and they have to pay the interest on deposit. Okay, and then they lend money to the ones who need. This is your banking and depository institution. The second one, we have a non-banking institution, and you can call them the non-depository institutions. So insurance companies, mutual funds, brokerage companies, they all fall under this particular non-banking institution or non-depository institution, right? So they cannot ask for monetary deposit. It's very obvious, but they sell financial products to their customer. So in the insurance company, what we are not doing, we are not depositing our money, we are investing in their insurance product, in their certain scheme of the insurance. So that's what we are saying. Financial institution will be divided into two parts. One, they can accept deposit and give loan against interest. Second, these are the institution which only selling the financial product and services. So these two categories of financial institutions are there. Clear to all? Let me know, clear till now? Achha, if I ask, what is difference between bank and NBFC? Just give me the points. Difference between bank and NBFC. Achha, speed is okay na with everyone. Speed is okay to everyone. Na? Sometimes I feel I'm going too fast. Let me know. Speed is okay with everyone. NBFC cannot issue check. Okay, the first difference I got from Rimri ma'am, that is NBFCs cannot accept, can participate. Banks can participate in payment settlement system. PSS is what? Payment settlement system. NBFCs cannot. NBFCs cannot participate in the payment settlement system. Payment settlement system is what? Your check, your NEFT, your RTGS, your demand draft, etc., etc., withdrawal and all. Like online platform, UPI, etc. So banks can participate in the payment and settlement system, but not the NBFCs. The second difference. What is just the another difference I have just discussed right now? Before this question, I have discussed the difference between the two. Let me know. No demand liability. Okay. Now, banks can accept the demand and term deposit. Banks are doing what? They can accept demand and term deposit. They can. They can accept demand and term deposit. But in case of NBFC, they can only accept term deposit. The another difference, next difference. Very good. The insurance under the DICGC. Now, what is DICGC? Deposit Insurance and Credit Guarantee Corporation. So, banks get 5 lakh insurance. I hope it is visible. The green color is visible. No, it's not. 1 second. So, if I talk about NBFCs, banks, they get up to 5 lakh insurance on public deposit under DICGC. Under DICGC. That cannot be taken by the NBFC because DICGC is a subsidiary of RBI. It's a wholly owned subsidiary of RBI that provide insurance on the public deposit to the banks. So it works for the Banking Regulation Act 1949. And we know NBFCs are registered under what? The Companies Act. That's why they are not allowed to get the benefit of DICGC. Okay, the major difference is that also that NBFCs, banks are registered under Banking Regulation Act. And NBFCs do under the Companies Act. Now it is 2030, earlier it was 1956. The another difference is that banks have to, this is mandatory, bank have to maintain the reserve ratios. Now, what are the reserve ratios? That is CRR and SLR. It is mandatory for the banks to maintain the CRR and SLR, but it is not mandatory for NBFCs. NBFCs do not have to maintain CRR SLR. So what is the full form of CRR and SLR? Let me know. Apart from this, the another difference is that banks, if we talk about the banks, they have to have a proper banking license. But NBFCs do not need that. They do not have that. So this is the basic difference in the banks and NBFCs. Do remember that. Now let me know what are the full form of these two. These are reserve ratios, CRR and SLR. Cash reserve ratio, statutory liquidity ratio. Very good. CRR is cash reserve ratio, SLR is statutory liquidity ratio. These are the money market instrument. These are what? These are the money market instrument. Okay, clear. Now, next, let's move forward. Now, the further financial institutions can be divided into three categories. So, do remember, the first we have divided financial institution in two categories. First, the banking institution or depository institution. The second one is non-banking institution or non-depository institution. Now, these financial institutions further will be divided into three categories: regulators, intermediaries, and the non-intermediaries. You can check here. Now, RBI, Adda, SEBI, PFRD, etc. Right? The second, intermediaries. What are they? Simple. The financial institution, that is commercial bank, which provide loan and other financial assistance like SBI, Bank of India, Bank of Baroda, Punjab National Bank, your Axis Bank, your Kotak Mahindra Bank. It can be a foreign bank. It can be HSBC Bank, etc. So let me know the banks which has been merged in PNB in 2020. In 2020, the major merger has been done that was announced by Mrs. Nirmala Sitharaman. So, which banks merged in PNB in 2020? Let me know. Now, apart from that, third one is non-intermediaries. That is your development financial institution, like institution that provide finance aid to corporate customer. That includes NABARD, SIDBI, Exim Bank, NHB, etc. So they are not mediators. They work for the particular sector development and they develop the particular sector. So that's why you can't say them this is the mediators. They are not mediators. No, Dena Bank and Vijaya Bank was merged in Bank of Baroda. Bank of Baroda had Dena Bank and Vijaya Bank. And that merger happened in 2019. I am asking for 2020 in the PNB. Okay, very good. United Bank of India and Oriental Bank of Commerce. Here, UBI is United, okay, not Union. United Bank of India and Oriental Bank of Commerce. Okay, now next. So these are the three different categories of the financial institution: the regulatory bodies, the intermediaries, and non-intermediaries. Okay, next. Next, if we talk about financial instrument, the first part we have discussed, that was financial institutions and how, like I have told you that the financial system has three components. Now, the first one was financial market, second financial institution, third was your market participants. Okay, so we have discussed the financial system. It has two systems that will be covering the regulators, that's a formal system, and informal, that we without the regulatory bodies. So when we talk about financial system, first we have discussed who are regulating them, what are the financial institutions here. Now we are going to discuss what are the financial instruments, like the financial product and services in the financial system used to fulfill your requirement of money, to raise the capital. So financial instruments are in nature of financial product and services. Obviously, these include instruments on the assets as well as on the liability side of the financial institution's balance sheet. Now, what does it mean? It simply means, like, let's take an example of a bank. Bank's financial instrument includes the current account, savings account, recurring account, and the fixed account. These are the financial instruments. And on the other side, in case of assets, we have a personal loan, educational loan, home loan, etc. So that's also financial product and services. And that's what it is saying, that the financial instruments are the financial product and services that are the part of the asset side and the liability side, as well as the liability side of a balance sheet of a bank or any financial institution. Now, they can also be in the form of intangible value added service, which can be facilitate financial development. It's very obvious. The banks, the services are what? If we talk about financial product and services, products are tangible. They are tangible. You can see them, you can touch them, but intangible will be services. So when we talk about foreign trade or when we talk about basic trade will be of two types: the visible trade and the invisible trade. So visible trade is what? in which goods will be traded. So the trade of goods is known as visible trade, but the trade of services is known as invisible trades. That's what we're talking about in the financial product and services. The products are tangible and the services are intangible. Okay, like for example, I'm using the internet banking. So at the time I'm using internet banking, I'm not getting any product in the physical form. I'm only getting a platform where I can do the transaction in my bank account. I can transfer fund. When I'm using the Google Pay or Paytm or Phone Pay or whatever to make the payments, I am not giving the physical currency to the shopkeeper or the merchant. What I'm doing, I'm just using a platform to pay the money. And that's a service, so it will be intangible. But there are certain products in which when you withdraw the cash from the ATM or from the bank, you get the physical currency there, so that will be the part of your tangible, intangible, both will be there, right? Acha, RBI has introduced the digital currency. Let me know the name of the digital currency that RBI introduced. Name of the digital currency that RBI introduced. Okay, so those guys who are on YouTube right now watching us, you can see the link has been posted here. One link has been posted here. On that particular link, you can join the Telegram channel, and on that particular channel, we will be discussing the doubts, or if you have any queries, you can ask there. And apart from that, let's say, for example, certain quiz we are going to conduct there. So do join the Telegram channel. That is link in the YouTube sessions comment section. Okay. Now, the cryptocurrency is the name. That's a terminology that used for the digital currency or virtual currency or electronic currency, etc. What is the name that RBI has introduced? Not in the link, not in the application you will get the link. Link is available on YouTube channel. On YouTube channel, this demo is going live. There you will find the link. Okay, so if I talk about the currency RBI introduced, that was CBDC, Central Bank Digital Currency. Very simple name. Central Bank Digital Currency it is. And RBI introduced the Central Bank Digital Currency for two segments, that is wholesale segment and retail segment. Okay, for wholesale segment, it was launched in November 2022. And for the retail segment, it was launched in December 2022. So this stands for, this is 22. This stands for Central Bank Digital Currency. So let's continue. Now, next, do remember the name of CBDC because this is a part of your syllabus in the JAIIB. And we have to discuss CBDC in detail also. Now, the financial instruments on the asset side. On asset side, simply includes loans and advances that we have already discussed, like the investments, the placements, the derivatives, etc. Acha, what is derivative? I have explained in the last class. Let me know what is derivative. Videos are not removed from the channel. Prasanna sir, videos are not removed from the YouTube channel. You can check in the live section. I will let you know in the end of the session from where you can find the past sessions. The yesterday's videos is also available on YouTube. Value of product depending on that situation, underlying asset depending on that situation means what? Elaborate this. Underlying assets. Okay, so derivative is what? It is a product. Derivative is what? It's a product whose value is derived from two or more basic variables. Derivative is a product whose value is derived from two or more basic variables. That is known as your derivative. Do remember that. It is dependent on the value of other thing. Right? Now, whereas financial instruments on the liability side of the balance sheet in deposits, money accepted from customer for remittance. Remittance means transfer of fund from one place to another. Then the insurance policy, your mutual funds, units issued and contribution received for building up a corpus for payment of pension, etc. So this is what the financial instruments are from the asset side and from the liability side. And that's very basic. It's very easy to remember. Depends upon different product price. you can't say different products price, but you can say depends on the basic variables. It depends on the basic variables, and that variable is known as underlying asset. So you can say it depends, the value of derivative depends on the underlying asset. This will be the right statement, Ravi sir. Okay, now next. While financial institutions and financial instruments provide the base for capture and transfer of wealth from the savers to investors, the process cannot be complete without the presence of financial market. So what we are saying, whatever you are doing, you have a financial institution, you have a bank, etc., etc., etc. Apart from that, you have financial instruments like the deposit, asset side or liability side instrument you have. But the process, what is the process? What we are doing in the financial system, we are exchanging funds from the persons who have deficit of money and from the persons who have surplus money to the persons who have deficit of money. So this process cannot be completed until and unless you have what? You have financial markets. Because it's obvious now, if you don't have financial market, how you will be able to fulfill the requirements of money? It's not like people on the traffic signals, they are standing there and they're asking, if you need a money, take from me. No, you need a particular place from where you will be exchanging the funds among the persons, or where you can perform the process of financial system, and that is requiring the financial markets. This is the third component of your financial system. Saying that depend on the currency value of underlying asset, that is also wrong. Why it is wrong? Because it will not always be the currency. It can be the index, like the Sensex and Nifty. You have heard about Sensex and Nifty, no? Sensex is the index of Bombay Stock Exchange. Nifty is the index of National Stock Exchange. You all have heard that. So if I say about value of currency, no. Not always the exchange rate will be the underlying asset. It can be the shares, it can be the index, it can be any other commodity that driving the value of derivative. So don't use the particular underlying assets name, but you can say depends on the value of underlying assets. That will be the correct statement. Okay. Next. Typically, a market is placed where two parties can get gather together to facilitate the exchange of goods and services. Achha, there are two terms. First is, let me write like this. There are two terms. Marketplace and market space. There are two terms, marketplace and market space. What is the difference between these two? Marketplace and market space. What is the difference between these two? Let me know. If you do not know the answer of any particular question, do write immediately, don't know. So that we will continue. We don't have to waste time. What is the difference between marketplace and market space? Very basic question. See, the difference is that when we talk about marketplace is actually a place that is physically existed there in the market, where you go to the shop, you visit the shop and you ask what you want, and the shopkeeper will be providing you the options and etc. And market space is what we are doing right now. So let's take an example of tech companies. Before COVID, there was very less existence of online market, online edtech companies, YouTube channel or whatever the platform we guys are using. Adda didn't have this particular online platform that we are using for the paid batches. Adda built this particular platform after the COVID-19 because we started providing online classes more and more now. And you guys are also comfortable in online classes because you do not have to shift in another city, or you do not have to go to the particular classes and then take the classes. You can take from your home, whatever convenience you have, from wherever you want, you can take the classes. So earlier there used to be the offline classes. The branches used to be there, offered at 24/7. It is still there, but that was the marketplace. where you have a physical branches where the students are going and you are providing them educational services. Now what is we are doing, this is the market space. Like you are shopping from Myntra, Amazon, Flipkart, etc. That's a market space. You do not have to go and visit there. Hana, that's the difference between marketplace and market space. One is online and one is offline. That's the only difference. Okay, in which of these two market communication will be better? Now, the next we are talking about. The term market is as used by economists has a different meaning from ordinary uses. Hana, every market have a different meaning as you are using that particular market. So it does not literally the physical place in which commodities are sold or purchased. As in a village market, nor does it mean the stages that a commodity passes through between the producer and consumer. It is not the meaning of your market. Hana, it has much more than that meaning. So instead, it refers in an abstract way to the purchase and sale transaction of a commodity and the formation of its price. Okay. It is possible in both. Like when you are going to the marketplace, you are asking what you want, Hana, from the shopkeeper. You are telling, just show me this particular product, this color, this size, and whatever you want. Same you can do on online shopping. In Myntra, you have filters. You can apply the filter. I want this color, I want that size, I want that brand, etc. That's also communication. Now, used in this way, the term refers to the countless decisions made by the producers of a commodity, the supply side of the market, and the consumers of a commodity, the demand side of the market, which taken together determine the price of the commodity. Now, this is the actual meaning of a market. So, market is simply a kind of term that represents by itself, like it is very obvious that market is a place where the buyers and sellers are present. Buyers are asking what they want, they are demanding the goods and services, and sellers are providing them the supply according to their demand. And as per the relation between demand and supply, what will be decided? Prices will be decided. And I have given you the example of this yesterday also. Like first, if the demand is more than the supply, the prices are increasing. Second, if the demand is less than the supply, prices are decreasing. That's what the paragraph is saying. Like the demand side will be from the side of consumer, the supply side will be from the side of your suppliers. Okay, so and these demand side and supply side come together and then they determine the price. Okay, and the price will be decided according to these two situations. Clear? I hope it is clear. Let me know till now whatever we have discussed in today's session is clear to all of you. Yes or no? Do answer in yes or no. Clear. Okay, next. So a financial market is a market where buyers and sellers trade money. Now we are talking about financial market. So obviously, now why you are going in a financial market? To fulfill the requirement of capital. So you are dealing in money, you are dealing in commodities, you are dealing in financial security, you are dealing in foreign exchange, you are dealing in derivatives. At what? At low transaction cost. At low prices. At that determined by the forces of demand and supply. And demand and supply are known as market forces. You can call them the market forces also. Market forces means that depends on the market. This is depending on the market. That is known as market forces. Clear? Let me know. So simply you are trading money, commodity. I have told you what is commodity market. Commodity market in which primary products are going to be bought and sold. That is the commodity market. Primary products, the raw materials. And financial securities, we have government securities, bonds, derivatives, etc. Shares is also financial security, etc. That will be deal under the financial market. Okay, and the financial market has four major segments that I have told you: money market, foreign exchange market, that is also known as forex market, capital market, and the insurance market. Capital market includes both, that is equity market and your debt market. Also money market and forex market regulated by RBI, capital market regulated by SEBI, and the insurance market regulated by Adda. Okay, these are the four segments of the financial market. Now, the phases of development of financial system, this will be our next topic and we will be covering that tomorrow. But before going, I will let you know certain important things. First of all, those who are watching us on YouTube, this is the information for all of you that the batch has already started from 19th of June. And in the batch, we have started with the Indian economy, Indian financial system classes. And this is the third demo of the particular subject. Apart from that, the other subjects will be started, and when the dates will be announced, by me, like when the PPB, the retail banking or AFM is going to start. But this is the batch. To enroll, you can use the code that is written here, PREP80. You will get 81% discount right now. Apart from that, on the Maha packs, 81% discount plus double validity is going on. Now, what you are going to get in this particular product, in this particular batch, you will get here the live classes, the conceptual classes like we are discussing in the demo batch. These are the classes that can be called as the conceptual classes. Then you will get here the topic wise mock test. Apart from topic wise mock test, you will get here the full length mock test also. Ebooks will be available, as well as you will have the class PDFs also. And class PDFs are available in your application where you find the recording of the class now. Similarly, at that tablet or on that particular tab, you will get the practice book, and that practice book is the class PDF which I am teaching you here. So now if I talk about the batch, these are the batches. Hana, click on the view all option and you will find all the batches here. So if you want to go with the Sankalp batch, October 2023, go here. You can check the English color of the creative is for English medium. Sorry, the green color of the creative is for English medium. Now, how to enroll? Just click on the buy now option and use a code that is PREP80. If you use this code PREP80, you will get 80% discount here. But for 1% additional discount, you can use the coins that is available in the application. So 3,600 something you have to pay for this particular batch. And the Maha pack are these. They have a double validity. Maha pack will include everything that is going on the application. Hana, that is going on the application, like all the batches of JAIIB, English medium, bilingual, both are available. All the classes, all the ebook test series, everything will be available. That's a Maha pack. The same procedure is there. The same code you have to use, that is PREP80. Okay, you can use the PREP80 here and you will get that. Okay, so you will get that. So this is the Office Asada 24/7. You can check this is the channel and you can see this is the live session is going on. In this particular live session, you will find the link. I will tell you how. What you have to do, just go to the session. Hana, and if you want, see live section is there. If you go here, you will find the past classes also. This is the second class. This is the third class. Okay, then that you can see here the classes are already scheduled. This is going on. So this is the yesterday's class. So this is how you can find the other classes also. It's not like we are removing the classes from YouTube. We are not doing that. Okay. So in comment section here, you can check the Telegram channel link has been given. You can join from the here Telegram channel. You can ask your doubt from there. Okay. So this is the whole information for all of you that I have discussed. If you have any doubt, do revise the topics that we have discussed here today. And do revise. If you have any doubt, you can ask in the next class. Okay, so I will be ending this session here. Thank you all for joining and have a very good night and see you tomorrow at the same time at 7 p.m.